Does your company outsource payroll to an independent outside payroll company? Well, if you want to know what they're doing for you and know how to record what they give you, you should watch this video. So, as I mentioned, it's usually a lot cheaper and a lot easier and a lot safer to simply pay an outside payroll company to handle all of your legal payroll responsibilities. But first, you have to sign up with them and you have to give them all the information they need in order for them to provide that particular service for you. Once you're signed up, you have to be aware of exactly what they're doing, and you have to know how to record into your records the information they give you on the weekly or monthly payroll statement. So exactly what do you do when you sign up? Well, when you sign up with an outside payroll company, you agree to give them access to one particular company bank account. And that bank account should be used exclusively for payroll. And what money do you have to make sure is in the bank account? All you have to do is make sure that you can cover your gross pay and your payroll taxes. And then once the payroll company has access to that, all you have to do is provide all the permanent long-term information about every employee to the payroll company, so they know exactly how much to pay everyone each week or each pay period. Once you're set up, all you have to do is give the payroll company the employees' weekly timesheets or time slips. Whatever information you have that employees record as their work hours, that's what you have to provide to the payroll company every pay period. And you can set things up so that it's easy to make sure that you send it in smoothly after getting your workers to fill out whatever documentation they need to fill out in order to get paid. Once the workers' information for the pay period goes to the independent payroll company, they will do all the work for you. So what happens after you sign up? Imagine the payroll company is here and you're over here. Once you sign the contract with them and agree to their terms, you have to provide to them all of the permanent, long-term pay information for each worker, like their address, phone number, social security number, and their pay information, whether they're salary or hourly wages, and if so, how much. Once they have that permanent information, the only other thing they need from you is access to one particular bank account where they can take the money from to pay the workers when it's time to pay the workers, and they can take the money from to pay the taxes when it's time to pay the payroll-related taxes. Once it's all set up, you are finished with any headaches or issues or problems. All you have to do each pay period is simply give the payroll company all the information about how many hours each worker worked. That's it. Maybe you could send in manual timesheets or time slips, or maybe the workers log their hours online and the people in the pay company can log in and see each worker's hours for each pay period. Once they have that information, they will do the following. They will print every worker's paycheck with a pay stub that explains all the withholdings and the calculation for gross pay and net pay. They will put it in an envelope and hand you a stack of envelopes, one for each worker's paycheck for that pay period, where you can just hand the worker the check. And for those who signed up for direct deposit, they'll hand you a stack of statements that you can give to your worker that explains the amount that was deposited into their bank account. Then they will actually pay all of the taxes in the correct amounts to the correct places at the correct times. And they have all the math calculations in their computer to know exactly when each of the withholding tax and each of the payroll tax needs to be sent in and how much it should be based on the payroll for the information that you gave them. And of course, whenever it's time to file and send in forms, the information they have in their records about your payroll, they will put on the tax forms and send it in on your behalf. And the most beautiful thing about them doing all three of those things for you is the fact that if there's any mistake, they take the responsibility and they have all sorts of liability insurance to make sure that you don't have any problems with the government regarding payroll taxes, withholdings, or tax forms. And the last step in this process is when they hand you a statement, and the statement is required to explain every withdrawal that they made to the bank account that you set aside for them to use for every pay period to pay the workers and pay the taxes. So when they give you a statement that explains any of the withdrawals that they made into the bank account, you have to take the information from the statement and make a big fat journal entry. Then, of course, the computer will post what you put from the journal into the chart of accounts, and your responsibilities are fulfilled, and everything else stays with the payroll company. And we're going to show you an example of exactly how to record that journal entry in a moment. But before I do that, let me take a moment to briefly explain each of the payroll taxes and each of the withholdings that are going to be included in this big fat journal entry that you need to record that comes from the statement from the outside payroll source. So if you can imagine that these are the numbers on the statement that the pay company gave you for this particular pay period, then how would you make the journal entry? Well, we know that every account that is an expense that decreases the number on your profit and loss should be recorded as a debit. The salary expense is the gross pay and should be represented as a debit of $1,000. And all the other expenses should show up in the debit column. Now, in this example, we have 4 different expenses for each of the different payroll taxes. We have federal unemployment tax expense, debit, state unemployment tax expense, debit, boss's share of Social Security tax expense, debit, and then the boss's share of the Medicare is also an expense to the company. And they would all show up on the debit side as separate individual expenses in this example, which means they each have a separate expense account in the chart of accounts. Now, the total payroll tax is owed at the moment that we run the payroll, and that total in this case is $126. So in this example, to show that we owe the payroll tax, we're going to only have one liability account called payroll tax payable. If we wanted, we could have one separate liability account for each of these different payroll tax expenses. Like if we have federal unemployment tax expense, we could have federal unemployment tax payable, state unemployment tax expense, and then what's owed, state unemployment, and so on. But if we did that, we would run out of room on the screen to show this journal entry. So this is the only one that we will condense. But there are other liabilities that we owe as a result of this payroll. We owe federal income tax that we withheld from our workers, and that goes on the credit side because it's a liability. We owe the state income tax that we withheld from our workers because we have not yet sent it in. We owe the workers' share of Social Security that we took from the workers' check, and the workers' share of Medicare or Medicaid that we took from the workers' check. Now, again, we could, if we wanted to, put them together in one payable liability account called withholding tax payable for the total amount. But in this example, we'll imagine that we have a separate account in the chart of accounts for each of the different withholding taxes. So then the question is, what amount would balance this journal entry? Well, you can see you need another $624 credit to make the total debits equal the total credits in this case. And that happens to be the amount of the net pay. Remember, when you looked on the statement, you saw that the gross pay was $1,000, and when you looked at the journal entry, you saw the total withholding was $376 from a moment ago. That means the amount we physically pay to the workers for all of the paychecks for this period is $624. So we would make a credit to the cash in bank for the $624. And of course, once you record these numbers in the journal, if you're using an accounting software, these are the numbers that would automatically get posted to the general ledger in the chart of accounts. And these are the numbers that would increase your liability accounts in the balance sheet until they are paid, and all the payroll-related expenses will show up in the bottom half of the profit and loss with all the other expenses. And of course, after everything is posted to the accounts, you don't have to worry about the other two areas of data. Once again, the payroll company will maintain long-term records of your employees for each W-2 and maintain the balances and keep records of what's owed to each of the different departments of government. And the final part of recording outsourced payroll is the final journal entry when the payroll company actually pays the taxes. They will indicate on the statement which taxes were paid, how much, and what date. Once you see that, you have to read it off the statement and enter a journal entry for the payroll taxes that were paid. For example, if you see that the payroll company actually paid down some of the money owed for federal income tax withheld from the worker for the prior pay period, you would record that in the journal entry as a debit to decrease the liability account that indicates what's owed in federal income tax that we withheld from the workers. And of course, there would have to be a balancing credit, and the balancing credit would go to the bank account where the money was actually taken and given to the payroll company so that the payroll company can pay the federal income tax withheld. So it would be a debit to any particular tax that the payroll company indicated they paid and a credit to the bank account that they paid it from. And that is an overview of how to record payroll when using an outsourced payroll company.